give you the markets update now. The JSE will be contending with struggling Asian markets this morning after U.S. President Joe Biden's remarks on China and Taiwan. Gary Booysen is portfolio manager at Rand Swiss. Joins us now to talk us through some of the market moves. Gary, good morning to you. How are the markets performing in early trade?
We look like we're on the back foot at the moment. So we did have a very positive session in the U.S. last night. As you mentioned, I think the idea of reduced tariffs internationally is certainly helping. But we didn't see the follow-through coming in Asia this morning. So we had, the tech share specifically down around 2.8% in Hong Kong. And that's fed through into our local market as well. So the all-share index is down almost 0.9%. The pressure is really being felt in the resource index as well, which is down slightly more. It's the index down the most today, down 1.25%. Industrials also on the back foot, down about 1%, and financials lagging the least, only down about 0.25%. So market definitely under pressure. The rand is pretty steady for 15.77 just after the upgrade that we received from S&P to our outlook. That seems to be generating a little bit of optimism around the local currency. Brent crude oil also very, very stable, around $111 a barrel, hasn't moved too much. But we are seeing a little bit of, risk off trade just filtering into the market with the gold price ticking higher, up to $1,855 per ounce. And that's really as the dollar index weakened slightly as well. So the dollar index down to 102, which is obviously the dollar measured against a basket of international currencies.
Yeah, let's talk about the Reserve Bank, which has released its composite business cycle indicator. First, explain a little bit what this data measures exactly and how we're faring.
Yeah, so it's a little bit of a slowing, is what the number actually has determined. But it's basically it's an indicator that tries to provide a prognostication of how the economy is going to do. It measures everything from vehicle sales to business confidence to money supply. There's a whole lot of different components to this composite index, and really trying to build some sort of leading indicators. So, what happened inside specifically was we saw a little bit of a detraction from out of the 10 available components. We saw a little bit of a pullback in residential building plans being approved. That kind of put a little bit of pressure on it. Also, just the rate of jobs growth also put the number under a bit of pressure. But where we saw that being counterbalanced was in the dollar-denominated commodity exports. That helped to lift the numbers. So there's a little bit of a slowing, but I don't think anything to panic, and certainly we're not seeing any impact on it in the financial market, with that currency still being very, very stable around, let's say, the 15.70s to the dollar.
Yeah. Quick take on company news. African Bank announcing its unaudited interim financial statements this morning. How are their numbers looking?
Oh, they're looking better than last year this time, at least. So we're seeing net profit after tax coming in at 257 million for the first. That's for the first half of 2022. If you compare that to the first half of 2021, they were in a net loss of 135 million. So definitely they've got a strategic turnaround plan called Accelerate 2025. Definitely paying some sort of dividend there and helping to turn the bank around. We're seeing their deposits up, sitting, deposits plus cash sitting at about 4.8 billion. So the bank, from kind of its history, the bank that's rising seems to be fairly strong, and I think they're taking a conservative approach, and it seems to be paying off for the bottom line numbers.
Yeah. Let's conclude the conversation with the Coronation Fund managers publishing its financial results, and wait for it, cash dividend. Talk us through their performance.
It is a cash dividend, but it's also a cash dividend that's down 12.3%. So, I don't think there's anything that Coronation is doing particularly wrong. I mean, they managed to decrease their costs around 13%, and I think it's just been a very, very tough market for them overall. If you look at the equity markets, at least, we're having, I think, the first 90 days, and these results are for the 6 months to the 31st of March, first 90 days of 2022 are the worst for equity market performance since, I think, 1932. So, being a fund manager, they are obviously very, very, their earnings are very, very related to what's happening in the underlying equity markets. If equity markets fall 10%, their assets under management will fall 10%.
Also, in the future, we would offer that service to.
All right, that's Gary Booysen. Thank you very much, Gary Booysen. I'm sorry to cut you off there. I'm not sure what exactly happened. It looks like we went to a live event there, but that's Gary Booysen, the portfolio manager at Rand Swiss. Gary, I'm not sure if you got cut off there. Do you want to just conclude that last point?
Sure. Yeah, so basically what I was saying is just that the coronation is under pressure, obviously because the markets are in a fairly difficult position. That said, the AUM only dropped around 1%, and they saw net outflows of about 2%, which is actually a fairly good result. So while their headline earnings were down around a fifth, so down 22.2%, this really is, I think, a function of markets. And if we see a rebound in equity markets, I'm sure they'll recover those losses pretty quickly.
Gary Booysen, thank you very much for that markets update, portfolio manager at Rand Swiss.